like to withdraw my life savings, please. And hurry!
So let's say hypothetically that you have saved a decent amount of money and now you are ready to explore the magical world of investing. Enter the best friend of investors, the one and only stock market, one of the most popular yet commonly misunderstood source of investment.
The stock market? Ugh, what do you even know about that stuff?
The world of investing can be a jungle. Bulls, bears, danger at every turn.
So once and for all, today I'm gonna simplify this complicated stock market for you. So sit back and relax and make sure that you watch throughout the end of this video to get a clear understanding of the fundamentals of investing in the stock market. The stock market is a global network of exchange where large sums of money move on a daily basis. Even though it is called the stock market, it doesn't trade goods or services. Instead, it trades securities. Securities are rights to financial assets like a share of a business. A share is a portion of ownership of a company. Simply, if you buy a share of a company, you own a small portion of that company. In order to build a large business, founders need to find resources. Imagine a company as a pizza. The pizza is divided into slices. These slices are shares of a company. Companies typically sell their
Stonks.
to raise the capital to grow and expand their business.
An IPO is an initial public offering. It's the first time a stock is offered for sale to the general population. Now, as the firm taking the company public, we set the initial sales price, then sold those shares right back to our friends. Look, I know you're not following what I'm saying anyway, right? That's okay, that doesn't matter.
When a company begins to sell a portion of ownership of the company, also known as shares, to the public for the first time, it is known as an IPO or an initial public offering. This process is commonly known as taking the company public, where anyone can buy ownership of that company. Just like you visit to the supermarket in order to buy goods and services, the stock market is the place where you can buy shares of other companies. Various companies are listed in various stock markets around the globe according to the geographical location of the company. Some of the most popular stock markets in the world are Nasdaq, New York Stock Exchange in America, TSX in Canada, NSE in India, and JPX in Japan. Therefore, these stock exchanges together create a global stock exchange system where shares can be traded all around the world. Before I explain the benefit of buying shares of a company, first you should know the concept of stock splits. Now you know that a share is a small part of the company, and as the company grows and expands over time, the value of the share of the company will also increase. Therefore, share value reflects how well a company is doing its business. A stock split occurs when the company increases in value and the individual share prices also increase in value, where the shares become expensive for the average investor to buy. Therefore, the company split each share into multiple shares to encourage new investors to invest in their company. Assume that you bought 10 shares of Apple for $22 each in 1980 on their initial public offering. Apple had their first stock split in 1987 when the share price increased to $79 per share, reducing the share price to $39.05. Now you own 20 shares of Apple. Their second 2-to-1 split happened in 2000 when the share price increased to $111 per share. This means your original 10 shares now worth 40 shares at $55.05 each. They had their third 2-to-1 split in 2005 when the share price hit $90 per share, dropping down the share price to $45 per share, meaning your 10 shares are now 80 shares at $45 each. Recently, in 2014, Apple had a 7-to-1 split when the share price hit $656 per share, making your original 10 shares 560 shares at $93.07 each. As of February 2020, Apple stock is worth $327 per share. This makes your original investment of 10 shares for $220 to be a whopping $183,120. This means if Apple didn't split their shares, today each share which was sold for $22 in 1980 would be $18,312, which is quite expensive for the average investor to invest in. Therefore, the benefit of buying shares is if you invest in a company which has the potential to grow, it will give you an amazing return on your investment.
Wonder how much I could make. Money.
I'm pretty sure that you have seen symbols such as MA, MSFT, HOG moving alongside in movies, local news, or maybe in a stock trading app in red or green color text. These symbols are known in the world of investing as ticker symbols or as stock symbols. They represent a company which is listed in the stock exchange. Shares can be divided into two types as common shares and preferred shares. If you own common shares, you will have voting rights, and you can vote on board elections and other financial decisions of that company. Preferred shares do not have voting rights, but these shares provide dividends, which is basically a bit of profit of the company to the shareholder. You can learn more about dividends in my previous video where I explain the 7 types of income. Many companies which provide preferred shares are often to reach the point where growth is no longer possible. For example, companies like Coca-Cola, AT&T, Nike, ExxonMobil, these companies will grow in the future at a very slow rate. Simply, if you are looking for a higher return on your investment with higher risk, common shares is the right option for you. Remember, with great returns comes great risk on your investment. Congratulations! Now you know the most essential fundamentals of investing in the stock market. You can learn how to make money of investing in my second video of this series of 4, where I'm gonna take you from zero to a top-notch investing hero by the end of the 4th video of this series. Before you go, make sure to invest in yourself by liking this video and subscribing to this channel, and click the notification bell icon to not miss the second video of this series.